All right. You know the deal. All is well. Say hello. Introduce yourselves in the chat. Do that thing so that we can all talk amongst ourselves. You know what I mean? So, we've seen some movement today. Little bit. All right, got the message in the Discord. We're good. We can officially fire this puppy up. All right, we got a couple people on there. Stream is live. All is well. Everything is in place. Good. Let me just say hello in the chat. All right, there we go. Okay, so yeah, we've seen some movement today. Good stuff. Overall, good stuff. Very nice. Look at the touch over here on the daily chart, right? So this was, this is the trend line, right, from the wicks, right, that broke through the 100 MA. So here, let me throw the 100 MA on for you so you can see it. Something like that. It's the blue guy right here. So as we pierce through the blue guy, remember those 8 or 9 days, those 8 days or so, we were gaining support, right? We ended up starting a trend line. And that trend line ended up being our pullback for support. So, you know, this would have been the most ideal location for a pullback, for a healthy pullback. And I say a healthy pullback because this is a monster move, and in comparison to previous days, it's abnormal, right? So it's an abnormal amount of trading given the current history. So a healthier pullback would have been at least come back a little bit forward. That gives you more confidence in the actual move as opposed to just a big old candle and then let's fire off one or two more and then we're just going to dump, right? Such is the case right here. Huge move up, find resistance, dump. Huge move up, scatterbrain, a little sideways action, another decent move, and then dump. Okay, this one got a pretty good pullback, but that's a little too deep. You see how far down the candle it went? Well, like half, right? Come back halfway, meet us in the middle. Or some type of historical support resistance that makes the most sense. That's what you had right here. That's the 100, right? So the 100 gave us so much support, eight times, right? I understand right here it didn't touch, close enough, all right? To not come back, you broke it, you never came back to touch it. That's this right here. You never came back, right? You're right here. You didn't even get close. Well, yeah, I mean, you got okay, but call it 10,290 on the low side. We were looking at 10,150. That would have been more ideal of a pullback in order to grab it, sort of reach down, grab it, and then ride it long until, you know, it's looking bearish, right? So these are the ideal levels that we're talking about for resistance, right? And we're coming off of a few things here. Coming off of our local high, we'll call it 14K. Right, to our local low, we'll call it 9K, right? You know, ballpark. I got the real numbers over here on the fib. All right, pushing back up, you know, you at least want to get back to 618, right? That's sort of like minimum, right? So 618 is all the way up here, 12,000. That's confluence with, you know, the last high that brought us our current low. Okay, that's good too. We like that. First, we got to conquer this swing fail. That's the black line right here. That's your high, right? And then your next high that failed to make a higher high after pulling back. So after having a big reversal, this is the next major attempt, right, to make a new high and failed. It's such an swing fail. So you failed to make a higher high. That's why that level is so important. Now over here you broke it just barely, then you had a pretty bearish candle, then you had another bearish candle that rode on top, and then you dumped. Okay, that's fine. At least you came up to it. Right here, you came up to it. You touched it ever so briefly, you found resistance, price wasn't ready to do anything with it, and pushed down. Okay, now that you did that, you created a level from which 2 points can draw the line, which is what we have here. After this local move, right, the push back up never made it. It never quite made it there. It just couldn't do it. Okay, no problem. So we come back down. Find ourselves a little leg of support, break that. All right, no problem. We find another little level of support all the way down here, right? All the way back down here. Back into that 92 zone. I think the low we got at that point was like 93 and change. All right. So that was another good push. We made a pattern over here. This was a bearish pennant that broke to the north side. Unusual, but it happens. All right, broke to the north side, and then we got massive gusto. Now, if we remember, volume was horrific. It was the worst we've seen since November. That volume was terrible. And I'll put that up here so that you could see it. There's that volume at. Let's go. All right. Look at these two nodes. These two nodes are undescribably painfully low. Long weekend, holiday weekend, Labor Day weekend in America, end of the month, a bunch of things went wrong here in order to give us these two moves. But that was the breakout move, right? That was the breakout move. But breakout moves on low volume, you don't put a whole lot of weight into that. You don't put a whole lot of weight into that. Because more often than not, you're going to get killed, right? You'll get destroyed doing that. So you have to wait, right? This is where patience comes in. Volume comes back. What does price do? It goes, insane. You get a you get a $600 candle, right? And it breaches through massive resistance. Not only a zone, this is a support zone. Look at the whole zone. Nothing was able to close underneath this level. Smashed right through it. Smashed to 20. Smashed to 70. Smashed to 100. You smashed to 9. All in one shot, mind you. And then you never came down and retested. So that is unfortunate. Now, that leaves the door open for the move to not be over. You know what I'm saying? That allows the door back here stays open until we actually have a confident move above a major swing fail with a break and close above and, more than likely a retest of that level. Now, a few things. One, we broke through this level clean, came back, retested. So this level here now becomes a little bit more important in the future. This is something we could draw out a little bit further and say, hey, if we end up pushing up here and we're doing some sideways trading and then we come down, this is an area you might want to look for support. All right, it's I don't want to say it's equidistant. It's not equidistant. I don't want to say it's a perfect distance away from the channel, parallel, but it is very, very, very close to being parallel to the channel. Now the channel, it's a little hard to see with everything on, but let me just slide it back a little bit. So that's the channel, right? And you don't have to use channels. It's more of a visual thing. It's nice to see something be respected on an angular fashion outside of just horizontally. So let me clear some of this junk off because there's just too much happening right here. Let's do that. Let's do that. Let's do this. Okay. So now you should be able to clearly see the channel. Of course, a huge breakout above the channel, come back, retest topside channel, push back, swing fail lower, come back down, break through channel, and then we're back in channel. The interesting thing is, once you're back in it, you respected it. You respected at the top side and you respected at the bottom side. Respected again at the top side, respected again on the bottom side, right? The respect, like any other trend line, like any other pattern, like any other horizontal support resistance, it's support until it's not, right? It's resistance until it's not, until you get a confident breakthrough. And then that is generally where the retest comes from. That's your classic support resistance flip. And you can see that very easily on the trend we were just talking about. Support, 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 support right here, okay? This over here, when you broke through, you could probably see resistance on the hourly. On the daily, we just smashed it. Just smashed right through. A little hesitation, smash right through, come back down. Here's your retest, right? Because you're coming from the bottom and you're pushing higher, so you want to come back and grab that retest. So, did we hit our swing fail? No, we didn't, but we were so close. Look at the swing fail level right here. So swing fail level somewhere around the 10,832 zone, right? Of course, it doesn't have like a perfect level, but you know, if you can get your cursor on there, we'll call it 10,830. So far on this daily, now it's not closed yet, we got 19 minutes, but so far on this daily, we hit high at 10,783. So it's $50 away from hitting that swing fail. Now, if you'll notice, you know, every trend, some will be like perfect to the T. Some will just kind of be like hovering off just a little bit. This could be a situation where it hovers off for a little bit. And we're just going to have to call that close enough as a rejection and then push our way to the downside. Now, that's not to say this doesn't have bullish attributes. We have to let the candle finish doing its thing. Currently, it's forming a spinning top. Spinning top means you had a body, whether bullish or bearish, but then you traded to the low side and you traded to the high side, and you sort of just, you know, settled out in the middle somewhere. And now this isn't a perfect spinning top, as you would have further downside. You know, you would want the wicks to be essentially identical. But what it does tell you is hesitation, right? Momentum to be with the bulls, you would need a more bullish candle, something like a Marabuzzo. This is nothing like that. This is rejection at the top side. That's not good, right? So when we talk about confirmation and we talk about validation, and we talk about actually having, you know, a trend that looks healthy, right? All these things are considered as you look at the candles, as you look at the price action, as you look at indicators, right? We could take a look at our RSI right here. So RSI is good right now, but it is sort of leveling out. If we get to the situation where it levels out right here, it levels out, it cools off, and then it comes down, right? Or it could level out a little bit and then get pushed up to the high side. So it's too early to tell on something like a daily RSI. Right now, in its where it's sitting is good, right? So we look for pros and cons to the north, pros and cons to the south, pros and cons sideways. And as we have confirmation from one to the next, that's where we're headed. So when we say, all right, I would have liked to see a move up here to the swing fail line. This might be as close as we get. Are we looking bullish or are we looking bearish? Well, on the daily chart, we're showing a little bit of hesitation after a clean break up and a pretty minuscule pullback. That's not to say in the next few minutes, if we push this price up even another 50, 60 bucks, right now we're looking a little bit more bullish. Now the body of the candle is far exceeding the wicks, and therefore it becomes bullish. Closing over this level, which used to be, and still is, a resistance level, is bullish. That's another factor for the bulls, right? And then we take a look at other indicators here. We look at our MAs. So before we were being held back by the 50 MA on the daily chart. That's this right here. A break and close above, which is what we're looking to do, is very bullish. Okay? Very bullish. Plus, now we have support from the 20. We have support from the 100, the 70. Our 9 is way the hell down here. That's crazy. All right. So as we're speaking, right, we're getting some buying in. That's good. That's what we want to see. You close the candle bullish, then we remain bullish. We don't want to long into resistance. That doesn't make any sense. We got resistance right here. We don't long into resistance. If you want to trade the breakout, that's one thing. If you want a short resistance, that's another thing. So you can play that two different ways depending on where you sit yourself as a trader. And as traders, we are going to talk about something real quick because I'm noticing there's confusion in the Discord. Okay? And I don't want my words to be construed in anything other than what they are. All right? Let's take a look at something real quick. Signals. The way you look at them, the way you read them, and the way you interpret them. All right? You have to remember every trader is different. There's BTC traders. BTC traders, by definition, don't care what the USD value is of BTC. They don't care. And if they do care, then they're doing it wrong. Okay? BTC traders are accumulating for the long term. Every trade they take is about accumulating more sats. All right? More Satoshis. Whether that Satoshi today is worth twice as much in USD or half as much in USD should be no concern at all. All right? That's a BTC trader. Stacking sats. That is your number one goal. Every trade you go into, you want to leave with more sats than what you went in with. USD traders, they care about the value. They absolutely 100% care about the value, and they are always looking at the USD value. They typically will trade USDT pairs, but at any time they could trade a BTC pair and simply convert it back to USD at the end of the trade. It does complicate things a little bit because you need to be on the right side of value. You need to be on the right side of USD. You need to make sure that even though Bitcoin went up or down, the USD value went up because that's what you're looking to do. You're looking to outpace the market on a USD value. Very different than stacking sats. And then we have hybrid traders. Hybrid traders are the ones that are essentially USD traders, but they have a pool or a pocket of capital for long-term accumulation of Bitcoin. All right. They have the hardest time because they essentially want to envision themselves having two completely separate accounts because you can't convert your base back and forth throughout trading. It gets way too complicated. So they need to have a pool of BTC. No matter how much it is, it doesn't make any difference. And within that pool, they trade BTC pairs to stack sats. Then they have the other portion of their capital in USD or Tether or USDC or whatever. It doesn't make any difference. As long as it's trading USD pairs, they can still trade all the BTC pairs as well and convert whatever they want back to USD and leave whatever they want back in BTC. Now, it gets even more complicated when you're in BTC as a hybrid trader and it's time to go to the sidelines. You hear the whistle call, the flag is blown, and it's sideline time. Guess what? You're back in USD. All right. So luckily, we have a lot of stable coins now. And to make things easier, you could just put a portion in one stable coin, put a portion in another stable coin, or, do some math, write some stuff down and take it from there. Okay. Now that that's out of the way, let's take a look at the signal in question. All right. We got some confusion on this one from what I was talking about last night. There's a BTC USD trade. It's a long trade. All right. Clearly, we have an entry zone between 94 and 96. We have two targets, 98 and 99.50. All right, it's a 3% gain and a 5% gain. I believe that's based off top side. So that's if you got in at 96, not at 94. Stop loss. This is not how it originally was. This is plus 11%. Obviously, that has been changed. Now, we've been going on and on for the last few weeks about taking your profits and leaving, right? You don't want to get stuck into a trade that turns on you quickly. Ren was an example. I think, Wabi, Matic a few days ago, whatever. There's examples out there where things were cruising. I think INS, another one. And if you didn't pull your profits, right, then you were stuck in the trade, and then you're like back to break even. All right? So, according to the signal, you should have been out right here. Okay? You hit 99.50. So whatever you decided as your trading plan, because you should all have trading plans, and say, all right, at target 1, I'm going to take out 25%. And at target 2, I'm going to take out 75%. If you did that, you would have nothing left. Now, when it starts getting a little bit more advanced is when traders start using other features, such as either manually writing up stop losses in a trailing fashion, or something like 3 commas where they enable a trailing stop loss. Well, then you're still in the trade, right? Now, if something else happens, if there's a conversation in Discord, if there's DMs going around, whatever the case may be, and it says, hey, we're just going to crank the stop loss up, like keep it in there. Go ahead. That is on you. All right? According to the signal, this is what we're looking at. All right? Signal got bumped up, stop loss got pushed up to 10.4. So there had to be a conversation at some point and said, look, if you didn't pull out everything at 99.50, hang in there, put your trailing stop on. It's cool. We got new levels to deal with. All right? You have to be somewhat in tune with what's shaking, because if you're not, it can get very confusing. If you only go by this, you're out of the trade at 99.50. End of story. All right? It's very simple. Here's your entry. Here's your targets. There's your stop loss. All right? Stop loss is never hit. You're out at 99.50. If you choose to stay in, then that's fine. But it's no longer the signal. All right? This is the signal. Click the signal, for the love of all. There are notes with every trade, and a fancy chart and all sorts of information that is very useful. So you do want to look at that. That was another question when it came to Matic, right? Matic had a situation where it came back down into the buy zone, right? And it had some information on there. So click it, and just take a look. See what it says. Update, stop loss raised to break even. Broke out, retested support, entry 129.30. Stop loss equals an hourly close under 121. If you can't meet those conditions, don't take the trade. Meaning, like, if you're busy at work, if you're on the construction site, right, your phone's locked up in a locker, whatever the case may be, and you can't get to it, don't take the trade. Don't take the trade. Right? There'll be more trades. That's when Jacob and I talk about, like abundance, right? Like approaching the market, like, there's endless opportunities. There are trades, right? More will come. You don't have to take the Matic trade. Or you might be able to get in on a pullback entry, right, during the course of the trade. Let's say this trade takes, 8 days to get 32%. Right, you're 7.75% up now, which means you just hit target number 1. They're expected or looking for 145. Right, you're currently at 134. You're below first entry. Now, I'm not saying go in, all right, but maybe you go swing into one of the analyst chat rooms, say, can we re-enter Matic? Something like that. Pull up a chart, see what it looks like. If the signal is still here, then the signal is still valid. Of course, none of these are going to make sense now because your 127 stop loss is based off of a different entry. You understand what I'm saying? So unless you are using what's on here, things will be different. So I need you guys to understand how that works so there's less confusion going forward. All right, so if you have questions, throw them in the chat. Let me go take a look at chat right now, and then we can address, anything that's shaking here. Crypto Sherpa says, hello. What group performs this song person? Oh my God, no. Are we really doing 80s trivia? Oh, dear Lord. Always bullish. Hi, guys. Be Regal. Johnny Cash remade it? Did Johnny Cash really remake it? No. I don't know about that. Is there audio yet? Do you not have audio? If I just talked that whole time and nobody heard me, I'm going to go crazy. So please make sure there's audio. All right, let's see. What else we got here? Do you think we are in a distribution phase? Looking at the market phases and comparing it with the daily on BTC, it seems that we are in distribution phase. A lot of people are bullish about the fact of backed entry and many other events, but I would like to stay on the right mindset and think the market can also play the opposite. Sorry for the long question. Yes, that is a very long question. I'll address that in 1 second. China trade issues bringing uncertainty for stocks. If we were supposed to get out from the signal at 99.50, which I did, what was the thinking for the stop loss to be changed to 1040? That is for the traders who stayed in. That is for the traders that put a trailing stop on. All right. So like I said, there's multiple kinds of traders wrapped up in one, community. Right. So if you have traders that are like, dude, I'm staying in, and we hear that from 10 people, okay, we'll give you some new information on that same signal. But if you're already out of the trade, that's fine. There's nothing wrong with being out of the trade. All right, there's nothing wrong with that. So, you have to keep in mind that every signal is geared to be the most filtered out and safest or highest probable trade that we're looking at. And that's the situation with that. Will we find resistance right here? We should. It's probable that we will. And what if we don't? What if it just blasts right through? What if it just goes to 12K in the next 5 seconds? It can. Sure. Is it probable? No. Right? So we try to at least weigh what is likely to happen. And when we do that, sometimes you have to make adjustments on the fly. So a lot of signals don't become signals. Right? And you'll see JC post them in reversal trades, continuation trades, margin trading. Like, there's 10 times the amount of charts going up in those rooms because those are high risk and hyper quick. You know what I mean? You're either in or you're not, and that's it. There's no time to fiddle around with 3 commas and set everything up and get everything all going and do the math calculation. There's no time for that. So you're in or you're not. Bang, that's it. And that's where like some of those reversal plays come from. It's like you get that wick down and that's a wrap. Like that's all you're going to get. Same thing with like continuation trend plays on pullbacks. You got a pretty good healthy trend going and then it just rips down real quick, 20% in one candle in a 15-minute chart. That's your buy, right? And that's it. It's over. If you're not in at that point, you're not in. No point in chasing it. There'll be more of those down the road. That's what I want to really hammer home is, we don't expect everyone to take every signal, although you absolutely can, but you personally, as a trader, need to be able to manage that many open positions. We don't want to have 10 open positions. People get way too confused with the portion that they were allotted to one that they were supposed to send to the other one, and then one's doing good, but the other's doing bad. Where do I cut my losses? And it becomes way too much. Even for a very experienced trader, you don't want to be managing that much, first off, and you don't want to be stressing about all these open trades. With a market like this, we could see one tank and then they all tank, right? And then when you see a collapse in the market and you see 10 trades all hit their stop losses within the same 5-minute period, that could be demoralizing for any trader. And we'd rather not have that. You know what I mean? You could suffer losses, right? Because the wins will outweigh the losses. Even if they don't number-wise, percent-wise, they will. All right, so something happened. I'm not sure what. Looks like something happened to YouTube exactly at 8 o'clock. So let me know if we're still good. All right. Let's see. And speaking of the 15, let's go to the 15. And then we're just doing a lot of rambling without a lot of looking. So let's look. We like to look. All right. So again, if everybody's with me, right? If everybody gets that, then we're cool. You know what I'm saying? I just nobody wants anything more for the community than everyone to be successful, right? That is the number one thing, period, right? Learning is awesome, right? That's great, but we want you to be successful. I love to teach. Jacob loves to teach. We love to, get our hands dirty in the charts and see what we see and spend hours upon hours upon hours of time looking at charts and going through strategies and diagnosing stuff from years ago, coming up with all these theses. Like, we spend our lives doing this, but it's to keep people successful, to help give them the best opportunity possible. All right, so there can be confusion, and that's okay, but let's hammer out anything confusing right away. Let's nip it right in the butt. Let's get everybody on the same page, and let's rock and roll. All right? So 15-minute chart is what we're looking at right now. We just closed the candle down. We can see the dump that happened just about an hour or so ago was fairly significant. It was a $120 drop on a 15-minute candle. Pretty good, but look at the buyback, though. Buyback's fantastic. All right, 70 EMA on the 15-minute chart does seem to hold a little bit of weight. You can see it prop up over here on the first big pullback, right here. Smashed it, held it, pushed it back up. We also had, that's our trend talked about in the update. Oh, that's another thing I want to talk about. I'll get to that in 1 second. So pulled it back up. That's good. We got the bullish cross back from the 9 and 20. So again, like this 9 and 20 on super low time frames, 15-minute, 30-minute, 1 hour. You can see this cross a lot. Don't put a whole lot of weight into it because it could just mean sideways like it does right here. Right, we got the bearish cross. All right, it's bearish for like 10 candles, and then it's back to bullish. This is choppy. When you get into choppy stuff, they do nothing for you, but they do help identify trends and try to provide support where it needs it. If you just have what do you call it? If you just have support, right? All right, good. So now with that 15-minute, okay. We got a bit of a dump. It's all right for now. Support at the 70. The buyback's healthy, right? But, we're going to have to see what kind of volume came in. And let's take a look at that. All right. Volume, so far in the 15, it's not great. Volume for the sell-off was good. So that's good to know. At least on the downside, a lot of strength in holding it. Just like we did last night, you throw a local level on here and say, okay, just visually, nothing's been able to close, beyond this level. Then you look for wicks for buying, and you say, okay, this area right here, if price comes up there, people sell. Sell, 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 sell. Everybody's selling when you get into that zone. When you cross over 10.7, it's time to sell. So you need to be aware of that as, an area of, high supply. There's a lot of supply there, so people are selling it off. Like somebody was asking about distribution, like this is an area of distribution. It's the same deal, just on a much smaller time scale. All right, back to the hourly. Let's take a look. All right, so very similar to the previous move up, right? We go sideways, bit of a dump, and then we had a nice buyback over here. Now, this is hourly chart. Like I said, hourly 20. We like to use that for pullbacks, right? So that's this right here. It hit the 20, went, made a high, sideways, drop back, hit the 20. So far, we're buying back. Now, if we come back down and test it again, that's fine. The way you trend trade low time frames is similar to this. You can use MAs like this, and it's very simple, right? You're long until you close below. You close below, you lose the 20, you're out of the trade. You close above the 20, you're back in the trade. If the 9 is above the 20, you're bullish. If the 9 is below the 20, you're bearish. Very simple rules. It's not exactly a strategy, but people use it and they trade, and you could be successful like that. All right, back into our channel we have come. So here we go. This line right here, that's our channel. Push up, come back, find support on channel. This is another indication of what are you going to do. Are you going to remain bullish or are you going to turn bearish? You have support levels just underneath. That was tested one time on the 4-hour chart, right? That's your 200 MA. It's kind of a big deal. So a big break and then a pullback with a touch is perfectly acceptable, healthy trend. So if this were to come down, we already tested it once. If you find support on it again, there's no problem with that. And then a push off, expect long. The problem is you have expected resistance coming right up. Right? This is expected resistance because that's the swing fail. Now, are you painting a micro bear flag, bull flag? Sure. Yeah, you got this. So with that, you can say, all right, you put a little bit more confidence in that your support holds. Maybe. This is kind of like super janky. Should actually be like that. More like a broadening, more like a downside broadening wedge than a bull flag. But for the traders that don't use wicks, you would have that, and that would be very much bull flag. If it'll let me do it, something like that. All right, so wicks or no wicks, it's up to you. It depends how you trade. All right, so that's the 4-hour. So 4-hour does have 200 MA coming up. That's the closest MA in the field of view, right? We got nothing else. So 4 hours looking pretty good. Standard pullback, nothing crazy here. So if you find support here, you remain within the channel, then you're short-term bullish for sure. But again, you don't want to long into resistance. So you have to watch that swing fail first. Let's take a look at the actual close. Let's see what happened here. So numbers. We opened the candle at 10,384. We hit a high of 10,783, a low down at 10,286. We closed it out 10,617 for a plus 233 or 2.24%. Okay. Good. Not bad. It didn't get as high as I would have liked. It's still more or less considered a spinning top. So it's an indecision candle. Heads or tails out of it? No. So you go with preceding trend. Preceding trend is up. So that does mean you would focus on preceding trend. Preceding trend would give you bullish trend short term. Resistance overhead likely. Good support levels down low. All right. So at least if you do go in, right, then you're going in with some type of confidence. Volume was fantastic. So this volume cleared, smashed over average volume, completely destroyed it. Best volume we've had in probably, it looks like about 2 weeks over here. Last time we had volume like that was the middle of August. So excellent volume. Volume with an increase in price is bullish. So that's another, tick off for the bulls. Again, on the bearish side, you're looking at swing fail. Is it demoralizing if we fail again? Some people might think so. You know, this is the anchor one. This is what got you the original high. This was your first swing fail. This was your second swing fail. So a third swing fail, yeah, I mean, that would probably be a little demoralizing for some people. It doesn't bother me one bit. It's, you know, long or short, just like to see where the candles are going. Coming up just past that resistance level is our 382 of the local move. All right. Coming back, that 236 is in line with our 100 MA, our 20 MA, and our 70 EMA, along with our old support level. All right. So we do have a lot of areas that are at least interesting enough to start dancing around. All right, so let's see what we got here. Volume is perfect, says Ron. So where would you put re-entry for Matic? We'll take, info. So there was an update on that. I don't think it had entry information. Holding well against Bitcoin rise, but let's increase our stop loss here to keep our trades at least break even. Yeah, like I said, if you didn't take the trade and you're like, oh, you know, now I'm home from work and now I want to get in on it, you know, that's something you're going to have to ask somebody. If you're not comfortable with it, you're so, like, you know, where should I re-enter? Again, that's like the signal's here. So if you missed it, you know, you missed it. If you're trying to ride it after that, that's not what the signal was designed to do. Signal's not designed to hop on in the middle of it, but there may be opportunities where you do get a very good pullback, a good re-entry. And that's fine. You ask someone like, you know, that's not my call. Matic's not my call. It might be Jacob. It might be LC. You know, ask them where the re-entry would be. And then this way they could provide you the best information on a re-entry. If they feel it's even worth a re-entry. Maybe it's not. All right. So seems messy. Seems messy. Yeah, the chart, I hear you. I mean, I live in chaos. Is that better? Is this, is that good for you? Come on, Regal. Look, did anybody walk into you know, Einstein's lab and say, dude, that chalkboard's messy? He could read it. You know what I'm saying? I'm certainly not saying I'm a genius, but I like to visually, I'm a visual learner. I'm a doer as well. So I need like hands-on, I need to see it, I need to do it, I need to experiment, and then I need to like visualize. And that's visualize. I could delete everything and redraw it for you, but that wastes time, right? And when we're streaming, we don't have a lot of time. So, you know, I'm not going to rewrite all these resistance zones. Or, you know, there's no need for that. So I'll do that, keep it clean for you. All right, so let's see. What do you foresee Bitcoin doing over the next 24 hours? All right, so I'll do that. There you go. Next 24 hours, I expect a test of the swing fail right here. So, well, see, now I got to turn this back on. So on this line right here, the black line, the major swing fail line, right now momentum is up. Slight pullback doesn't bother me in the least within trend. So, you know, this little pullback over here is no big deal. You find support over here and we're talking, right? And I'm looking at, you know, I'm aiming now. Of course, the price has changed. So now 10,798, we'll call it 10,800. It's about $30 lower than it was on yesterday's. But now we have a new candle and we have a new time frame. So I would expect a push up and a test of our swing fail. Now, if we get what we got last time, we got this. We got one huge candle up and it just a wick. Came all the way back down and ended up selling pretty hard, right? Ended up being a huge bearish spinning top, right? But then the next day, we just barely broke and closed over it, not without saying, hey, you know, there's very little confidence here. Then we had a massive doji. We had a bearish candle here. Nothing too crazy. Kind of like a, you know, it's a hanging man formation, but it's just like, it's not like at the top. You would like it to be at the top. But this doji right here, for sure, that's Dragonfly Doji. That's like no good. Now, typically you see this at the bottom. You see it at the end of a downtrend, not so much at the top of an uptrend. But here it is. And, it can be bullish based off of the buyback, right? But you have to put it within context. So context is prevailing trend is up, right? Your previous candle stopped out. No movement here. Rejection to the top side and rejection to the top side, right? So this level becomes dramatic. And that's where you do something like this. Say like that level right there is hardcore. Right? No one's getting over that level. Right? And because of that, then you could say, okay, well, we need to break and close above that for some confidence. Forget the swing fail. We broke it. It's great. Now we need to break the new level. That's what we did last night, right? When we looked at the 15-minute chart. So that's this right here, right? Just a super local level is saying like, all right, this is where we're currently finding a restriction in movement of price action. There's too much supply up there. There's too many people willing to sell it. Nobody's willing to let it go to the next level. They don't want it to. They just want to sell it and get out of it. Maybe they're trapped in a long, maybe they're trapped in a short. Who knows? I don't know what their deal is. All right, so that would be the most ideal setup, is at least an attempt here. You remember, not every candle has to be a $600 candle. We could easily spend 24 hours and just test this, right? Ideally, we would test it and break it and close above it. We don't need it to go, $700, $800, just a little bit. Break and close above on the daily chart is bullish for a swing fail setup. And then that sets you up huge, right? That sets you up back up here. Of course, you got levels in between that are going to be a pain, but that's your next target once you break the swing fail, right? You break the swing fail and you push back up to 1. That's a 1-to-1. You want that back, right? That's the whole point. That's how swing fails work. If we don't get the push to the high side, or we get to the push to the high side and we get rejected, we have clear levels of support. This whole zone over here encapsulates our 100 DMA, our 70 EMA, and our 20 MA all in one spot, right? So that's cool. We know that's good. This blue trend over here, that's from a 4-hour chart trend on the swing fail, not using the wicks, right? Cutting through this wick, cutting through these bodies, but using local price action as resistance. All right? So it's just another way to draw a trend line, right? Everybody does them a little differently. Put them on here, that's fine. This level worked out again. So another area of confluence. So this zone, I'll move my little thing here. That zone right there is confluence with the 100 daily moving average, the 20 daily moving average, the 70 exponential moving average, our local resistance zone, right? This whole area was resistance, flipped into support. If we find support, it's also this trend and this trend. It is the area of confluence. So that would be the area to buy support. Now, like all trading, right? You're either right or you're wrong. Okay? So if we are to come down here, I expect support right here. If we fail the first line of defense, then you have to move to your second line of defense. And that's this zone down here, this untested support zone. All right? If we break now to the high side, we break to the high side, we push past the swing fail, we don't look back, we go parabolic, then we look at the next major resistance zone, which is up here. This is the 50% off of the local move, high to low, right? In confluence with a previous resistance zone, you put us right here. So we have target areas that sort of encompass whatever it decides to do. We've seen this. Candles that literally move $12 in 24 hours. A little bit up, a little bit down, and then they close right where they started. That's possible too. All right. This candle is bullish, but it does represent indecision, right? It's not bullish to the extent of momentum was carried over from this bullish candle and we had another big day. This isn't a big day. It's far from a big day, right? This is a lot of selling, okay, and some buying when you had to, and that's about it. It's not a big day. It's not a victory for the bulls, all right? Clearing levels is a victory for the bulls, and we did clear the 50, right? And that's this right here. So put that back on. That black line right there, that's the 50. All right, and that's essentially like that's the last MA in our way. So that's a victory for the bulls right there, for sure. Okay, so what do we got? What do you foresee? Okay, we did that. If, let's say, I exited a target. Regal, what are you talking about? So where would... Oh, that's back to Matic. All right, yeah. Again, Matic stop. I'll pull the Matic chart up. We'll take a look at it. Check your bullish bias. What? Check out 4-hour and weekly dip most likely coming. Well, we looked at the 4-hour. Check my bullish bias. Thanks. I think I'm kind of explaining. I'm not a bull or a bear, right? I mean, I look at price action. This is what I'm looking at. You're looking at the same thing, all right? So again, this is what we're looking at. We're looking at support at the channel. That's right here. If you lose it, you go to the 200 MA. You lose the 200 MA, then you drop, right? This is price action. This is a pullback. You find support on the pullback or you don't. You don't, and then you continue downward until you find other support. You find it, and then you push forward. Where? To the next level of resistance. That's right up here. All right? Yeah, weekly. Now, weekly, we're actually looking pretty good on the weekly. Let me pull that chart up real quick. I don't want to use that one. Let me use this one. All right, so weekly, right here. Look at this guy. Massive symmetrical triangle on the top of an uptrend. It's kind of like a big old bull pennant. But we're out of room, right? We're essentially out of room. We could fit one more weekly candle in here, and after that, it's basically over. Again, I say this every time we look at patterns, right? This should have broke between 50 and 75%. Any candle after that, the closer and closer you get to the apex, the less valid the pattern becomes, okay? The less quality the pattern it is. It's no longer as quality. If we broke here, that would have been huge. If we broke here, that would have been huge. Unfortunately, we didn't get a break either way. So we continue in the pattern. Generally speaking, this is how it should look. And then push, right, to the upside like this. All right, that's your typical formation. When it, I mean, should be a little higher. This should be a little higher. All right, it's not my best drawing, guys, so take it easy. All right, but essentially what happens is you have price pulls off into an impulse move to the upside. It pulls back. It makes a lower high, but then makes a higher low, and price coils, right? It ends up making this pattern that looks like a symmetrical triangle, and then the breakout should be, and this is not 100% of the time, but the breakout should be to the upside. Same thing on the downside, right? If everything was reversed, this would be the prevailing trend was down, and then the breakout should be down, right? And when I say should be, I think the stats are probably somewhere around 60%. So, just over like a 50-50. So should and, will definitely pretty far from either one. But right now, it's total indecision. But historically, uptrend, symmetrical triangle, break to the upside. So, when we talk about probabilities, right? It's more probable that you break to the upside than if you break to the downside. Can you break to the downside? Absolutely. There is no reason at all why you can't break to the downside. Is it more probable just on patterns and prevailing trend that you break to the upside? Yes. It's more probable that you break to the upside. All right, but again, you're closer and closer and closer to the apex. This becomes less and less and less valid, which means I put less weight into the actual breakout. Right? I'm not convinced. We could break up, right? Trade here for a week and then dump $2,000 in a candle, right? That's absolutely possible. Now, the weekly chart does have a couple good things going for it, and that's right here, this 20. Now, we talk about the 21 EMA. That's on the other chart. On this chart, static basically always is the 20 MA, right? And that's just another good indication of pullback support on major trends, right? So clearly we lost it right here, but you look at the rise up, right? That's what you look at. So all support, 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 came back, support, 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 pullback, support, pullback, support, pullback, support, and then right here you lost it. All right, so, you know, when you have something that has history on it, you try to look at how it behaved. Even though we're not trading in 2015, it's good to know how people reacted to certain levels and certain parabolic moves and certain pullbacks then, because some of those traders are the same. Some of them are gone and they're never coming back. And a lot of new traders have taken their place and they buy and sell at weird spots. So you sort of have to just, you know, dance around with what you have and try to make the most of it. All right, so I hope that helps. Let's see here. So Reed, I mean, I don't know. I don't know what you want me to say. Like I said, I'm neither a bull or a bear. I just I look at price action. We got to talk about dominance too. Let's take a look at that. All right, so dominance on the Bitcoin side, right? Huge move up, broke our previous high after coming down and ranging for almost 2 weeks. All right, so we did break range and then we came back. We tested the top side of range, and then the last few days we've been going up. But we were going up this day here and this day sideways on literally no volume. So there's very little weight put into that move right there. But then we got a huge move 2 days ago and a big move yesterday. Now that move today or yesterday broke our local high, coming back for a flip. This is support, 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 break, pull back. This is one retest. Looks like we're coming for a double retest. If we get a retest and rejection, then that's exactly what it is. A retest, rejection, then the alts can come back to life. If we break through, right, then that was your retest, and it's like, nah, man, I don't want to be hanging down here. I want back in. And it'll ride that trend back in, all right? Which would be, you know, every time I come to these charts, I swear, everything moves. Well, there you go. Now you got a little bit more room. If that is, you know, it's not that it's disaster for the alts, but, you know, maybe time to bear down a little bit on some of those alts. You know what I'm saying? Here's a view, just another view, Bitcoin on the hourly chart. This is with the volume profile going back for the last 24 hours of trading. So hourly chart, 24 hours started over here. That was last night's close. Sideways range, good push up, good pull down. Right here you found support, right? That's the 20 MA on the hourly chart. Pushed it back up. You got your 7 and your 9 EMAs, and we just lost them right now, right? Lost it right at the close on the hourly, and we're pushing downside, right? Applying overhead pressure on the current candle at play. You also have the point of the control is sitting up at 10,695. That's generally an area. Point of control is generally something you would retest in the next candle. All right. Moving on. All right. So, thanks. I'm fairly new. So sorry if dumb question. Brandon, I didn't even see a question. Oh, what do you foresee Bitcoin? Oh, yeah. No. No dumb questions. You're cool. Matic is a perfect example of what oh, yeah. So Matic. All right. Hold on, B. That was a BTC trade, I would imagine. All right, we'll pull up the chart so we can talk about it. Matic is a perfect example of what I see often. A little extreme, but very similar. Initial signal, hit T1, then recoil. I leave it T1 every time, but I never know where to get back in. All right, so are you you're selling 100% at T1, even though the signal is calling for 4 targets? Because you can. There's nothing wrong with that. I'm trying to figure out where your head's at. I typically just jump in right before T1 and shoot for T2 with almost 0% stop loss for retrace, and I rarely get target 2. Okay, well, first off, if you're selling at T1 and you're buying back at T1, just stay in the trade, or just bump the stop loss up. Unless you're going in with less, you know what I mean? And if you're going in with less, then just pull a portion out of T1. But if you're like trying to scalp a buyback, a pullback on a longer play, I wouldn't advise doing that. Unless you have scalp experience and then you want to scalp. Let's see. Can we get an update after targets are hit to verify volume or short-term trend is rounding from the recoil and heading back up? All right, you might need to reword that because I don't know what you're talking about. Seems Messy was about the stop loss on Bitcoin added outside signal parameters. Again, that's like it's to try to accommodate some of the traders that stayed in. Again, like, you know, we put the signal out and traders just won't listen to it, right? It's like you have a target 1, you have a target 2, right? And then the Discord's all lit up. Well, I stayed in, I didn't sell. Okay, the signal says sell. Well, I didn't sell. All right, so now what? You need a new stop loss? Yeah. All right, so we'll put a new stop loss. So, you know, you try to accommodate everybody, and then you find yourself, you know, running around like you did a whole bunch of stuff wrong. Like, the trade was the trade was the trade was the trade. It was it. You know what I mean? If things were looking really good for a new trade, then a new trade can go out. Right now, in this situation, new trade didn't go out. So for the people who stayed in or stayed on a trailing, that's one thing. For people who completely ignored the suggestion to take out at 2, then that's on you. And for the people that were like looking for the next re-entry, there isn't a good one yet, right? So, you know, I mean, it's sort of. You have to understand that the market moves every second of the day. And when a candle goes, you know, $400 in an hour or 2 hours or 3 hours, right? There's very little confidence in just buying the middle of that. We're not in the business of chasing candles. It's not what we do. If you want to do that, that is on you, but no one is going to help you chase a candle. It's a recipe for disaster. Ask any trader that's been trading over a few years, you know, if that's a good idea, and every single one of them will tell you no. There's a reason for that. It's a horrible idea. No sustainability in trading like that. So we certainly don't advocate it. We can't come to your house and smash your computer with a baseball bat to make sure that you don't do it. So, you know, if you do it, try to do it responsibly. You know, if you're going to chase it, at least set yourself up with a stop loss, or at least a way to get yourself out of the trade quickly if it does turn on you. If it does, however, you know, go in your favor, that's great. But again, you know, you don't want to, at least personally, I don't want to profit on a mistake. All right? Because I don't want to get into the groove of bad habits and relying on inconsistent results or relying on some sort of lucky thing that I did in order to profit. I want to be able to profit consistently and have a system in place that allows me to do that, so that there is no guesswork. There is no, I got to jump up and down, do 10 jumping jacks, spin around in a circle, flip a coin 3 times, and then hit the buy button because it worked 3 other times. I don't want to do that. You know what I'm saying? Okay, so let's see. Zoom out, though, on the 4-hour or weekly. Zoom out to show the jump to 13.14. In comparison with this one, looks dumpy. Zoomed in that close, looks bullish for sure. Okay. Yeah, I mean, yeah, okay. Listen, when you trade price action, right? You're trading just that, price action, right? You're trading local price. Like that's how you trade, right? You look at historical support resistance because those are areas that could give you just that, support or resistance. So let's go back to Reed over here. Let's put the 4-hour chart on, right? And let's take a look. Right? So everything off. Okay. So we're zoomed out. Reed is saying looks super dumpy, and then I have to check my bullish buys. Okay. I think I've explained that I'm not a bull or a bear. So let's clear the air right there. let's take a look at it. All right. So as formation, what are you saying, Reed? You're saying show the jump from 13 to 14 in comparison with this one. Show the jump from 13, which is, so we're not really zoomed out all that far, unless you're talking 13 to 14 like the original 13 to 14. But here we go. So the jump from 13 to 14 happened in what, one candle? Yeah, so that happened in one candle. In comparison to this, this is a one candle 4-hour move, and this is a I don't know, 10 candle trend. This is at the top of a parabolic move. That's one candle from 13 to 14. And this is, I don't know, we'll call it 10 candles from, I don't know, 95 to 10.5. So it's $1,000. I don't understand what, I don't understand what you're looking for. We've talked about in great depth, probably too much, that people are probably sick of hearing it, what we're currently looking at, right? And this is what we're looking at. Support at the 50 or the channel, break it, you go south. Find support, you go north. That's it. That's all we're looking at. This move right here, I don't think has anything to do with 13 to 14. It's my personal opinion, but I don't see any resemblance at all to this over here. I don't see anything like it. I mean, this is one candle from 13 to 14. It's spread. It's a massive move. It's $1,000 candle. 7%. All right. Anyway, we're getting sidetracked down here. Let's go back to BTC Matic because that we're looking at. All right. So, Reed, if you got more questions on that, just let me know. I'm trying to see what you're seeing, but again, I can only look at what's in front of me. All right, you lost JC Trendline. Did he post something in Discord? He might have put something in Discord. I don't know what trend that is. Is that for Matic? Is that for Bitcoin? On the 1 hour? Let me know, Andre. All right, let's see. I'll be here tomorrow to say I told you so. 80% chance we dump by my indicators. That's cool. That's awesome. So show us your indicators and show us what gets you 80% confidence in a downward move and how far down. And then I will watch because I'm always learning. That's what I do. I always learn. So trust me, dude. I'm somewhere between 500 and 1,000 indicators of straight up testing. That took like 8 months of my life. Very few indicators are reliable in crypto, period, let alone just in general. Like most indicators are just pure garbage. But there are indicators out there that do, very much sort of, basically live with the makers. So if, you got an indicator from a maker and that maker is using, bots to trade, then, that's the hidden sauce right there. You can get into the maker's head on the bot side of trading, and then you trade with the bots. Then you can't lose, right? All right, so let's see. B Regal, yes, I get out at T1. Okay. Scalping inside the long, this is what I'm doing, and I'm not good at it. But it almost always hits T1, then drops down. I wish there was a way to provide an update in between targets of your confidence. Oh, you want like you want like a play-by-play after it hits a target? I mean, you can ask one of the analysts. I mean, this has an update. Stop loss raised to break even. Entry at 127. The way I look at it is when it becomes invalid or when it becomes too risky or if something catches the analyst's eye to the point where they need to pull it down, then they'll pull it down. Otherwise, let the trade be the trade, right? This is, you enter here, right, and you exit in these 4 spots. That's it. The only thing you should ever have to do with this trade is raise your stop loss if the analyst says, hey, why don't we raise our stop loss to break even? And then this way it's a 100% guaranteed profitable trade. Awesome. Outside of that, anything else you want to do inside of that, right, that's sort of at your own risk. This is pretty clear. Enter, sell, 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 stop loss. All right. If confidence was so low after target 1, the trade would be closed. All right. But that's up to the analyst who drew it up. It's up to the analyst who saw the trade. This is what they're looking for. They have a certain tolerance for sideways movement. They have a certain tolerance for pulling back into entry buy zones. They have a certain tolerance for what the current price action is showing them. And then that's where you get the update. You get the update if something is changed that changes anything that you see here, right? Then you'll get an update. Outside of that, just let it ride, right? The signal is the signal, right? For a reason. It doesn't need to change unless something happens. And if something happens, then, they'll let you know. All right, let's see. I could PM you later. Yeah, I mean, that's fine. I think I kind of explained it. Which exchange can you suggest going to September 12th after Binance GeoBlocks US that can use 3 commas? Oh, that's a good question. So I have no answer for the exchange that we're going to because, with trading in crypto, you got to go to liquidity, right? You need liquidity. So there are exchanges that I'd like to see be the receiver of that liquidity, but we don't know until everybody leaves Binance. So, coffee. It's delicious. So what we're looking at is Coinbase Pro. We're looking to see volume increase at Coinbase Pro. We're also looking at Bittrex. Bittrex is a U.S. exchange with, a healthy amount of altcoins. Not the most impressive list, but, there are some on there, far more than Coinbase. And, an established exchange, been around for a very long time. And then for U.S. traders, there's no need to worry, right? So if you're trading on a U.S. exchange, as an American, it's fine. The coins that they have selected, they've already, purged out a whole bunch of coins that we can no longer trade as Americans, which is unfortunate. But, it's sort of like it's within the times, right? This is just expected now. So, expect to see that more and more often. The Polo, Gemini, these are exchanges that have been around for a long time. They're both based in America. They both have their own interesting, unique features, but they are mostly geared towards, Bitcoin, Ethereum, XRP, Litecoin. And then you have Kraken. Kraken, again, is another good exchange. Been around for a long time, based out of here in America. But again, they have a limited order book when it comes to altcoins. Then you have, let's see, what were the other American ones? So you got Huobi.us, not to be confused with Huobi.com. Okay? Huobi Exchange is huge. It's fantastic. It's great. It's phenomenal. It's got a ton of altcoins, got a ton of liquidity, not for Americans. Americans get to use their little brother called HBUS. HBUS is Huobi US, and now they finally took over the name. But they might have even taken over .com. Don't quote me on that. Do your own research because I don't have time to do it. but the US version has been scaled down significantly. Very few altcoin pairs in comparison to their bigger global brother. And again, very little liquidity. So again, it's another issue that we need to deal with. And then you have KuCoin. So KuCoin is the only one on the list that is non-American based. I believe KuCoin's out of Hong Kong, if I remember right. But KuCoin at the present moment doesn't have a KYC, doesn't have a mandatory KYC for U.S. customers. So in other words, choose your own adventure. You're not supposed to trade on there. But if you trade on there, you can't do KYC, right? Because they'll ban you, right? They don't. As Americans, you're not supposed to trade on there. If you don't do KYC, then you have a limitation on withdrawal. It was similar to the way Binance was, right? You just had a limitation on the amount that you can withdraw with no KYC. Once you verified and did KYC and yada yada and all that jazz, your limitations got removed, right? So, or you went up to the next level. So KuCoin is a great exchange and it has a ton of pairs. Currently has a decent amount of liquidity. The problem is if they do what Binance did, and I would imagine, my own opinion, but I would imagine the writing is on the wall, then it could be a short-lived experience, right? You might be on there for a month, 2 months, 10 months, a year, 2 years, and it's like, well, here comes the hammer, here comes the SEC. I don't know for sure, but I don't think any exchange is really gonna, flip the bird off to the SEC and say no. Now you have to remember when it comes to trading internationally, SEC still can get their fingers in there and they can push some buttons. When you get into leverage trading with U.S. citizens, it becomes a monster fiasco. And that's what Binance ran into, right? Because they wanted to introduce margin trading. And once you get into international margin trading with U.S. customers, it is nightmare status. And it is a big no-no and is not going to happen. And that would put more than just 2 eyes on Binance. That would put about 1,000 eyes on Binance. That's why with our Forex is, garbage, because we only have a handful Forex exchanges to, use when the rest of the world has the best Forex exchanges in the world. We're left with what we're left with. Okay, I agree. Well said. I buy 95% of Sigma. Okay, cool. What indicators do you recommend as your must-have, with there not being many that are reliable? Oh man, that's a really good question. Geez, I would, nothing's a must-have. Nothing's a must-have at all. So look, this is like bare bones. They call it naked trading, right? This is price action. So naked trading is looking at the chart, and you could throw trends on, horizontal. This isn't an indicator. This is like I visually see this, and because I can't magically make the line stay on my chart, I'll use something to draw it. You can use trend, you can use horizontal support resistance, even Fibonacci, right? And it's not considered an indicator. This is a drawing tool, right? So let's say this was your big move up, right? And that's your high, something like that. So this is as bare bones as it gets, but you can absolutely trade off of this. So look at it, and what do you see? Right, you see an area that was held back for resistance. You pushed it, you broke it, you came back, you fell through it, and then you dumped it. Came back again, so this was a second attempt, failed again, and pushed back lower. You have this low line support over here, which really has no validity to it. And by that I mean it's only two anchors, right? One anchor, two anchor, like you stabbed it right here, but I put a lot less weight into here and then a lot more weight into here. This was used a lot. Even though it was flipped a lot, it was at least used a lot. I know that there's a reaction near that line. All right. So you can adjust these any way you want and say, all right, well, that price action was kind of garbage. Let me do this and let me do this and let me see what this sort of nets me. And this looks a little bit more realistic. Why? Because I start with my anchor one, I come down and I get a good solid reaction. Good push. Good push off, come back, another solid reaction, decent push, and another solid reaction, good push, and then another solid reaction. So this is how I would draw a trend line, right? This is no indicators. I'm not even volume, right? This is just straight up, look at the candles, look at the chart, and see what it's doing. Now, it's a 4-hour chart, so you have to remember this is not a daily, right? Daily charts are going to look different. Now, swing fails. This is like so to speak, like a pattern or a style of trading or just an area to look for, something that you can get ideas off of, right? Not much going on here. It's so far away from price action that, I just don't care, right? It's just like, I'm not worried about what's going on all the way over there. I'm worried about something that's happening a little bit more recently. And so I might do something like this. And why did I do that? Because to me, this looks okay. This is another area that'll give me an idea of resistance on the local side. So now I zoom in a little bit and see what's shaking over here. What's actually happening. If we look at our Fibonacci that we laid out before, we could see we had a little reaction over here, a little support at the 382. All right, no problem. Come back down here, we had a little reaction with the 5, right? Push below, came back up, found support, found rejection, push all the way back down. That's our old trend that we said we liked. We pushed back up, broke the 5 without even blinking an eye, smashed up, tried the 382 again, found resistance where on our new trend that is now our designated resistance level, pushed back down, found support on our midterm level, dropped down for a quick wick, found support on our original trend all the way down here, and then we smashed back up again, back to the 382, and now we're dancing around this trend. So if I'm looking at that, I'm saying to myself, well, we haven't been able to push past these levels. So I'm calling this resistance. So what do we never do? We never buy resistance, right? We never buy resistance. I'm not longing a brick wall. I'm not doing that. I will wait. And if we find resistance and it comes all the way down here, then it was the right move. If we push up and we close above this line right here, well, then I'm looking to buy. And then I'd be looking at a few other things. I'd say, all right, I got a low, I got a high. Well, body-wise, I got a higher low. Technically, I got a lower low. But I'm okay with this. This is allowable for me. Everybody's a little bit different. This is probably well within 2%, I would imagine. And if it is, then I'll call it a double bottom. Let me get this puppy over here. Let me grab the low here, and let me grab the low here. Yeah, 0.83%. This is, to me, not only the double bottom, it's a three banger, right? Triple bottom, actually a quadruple bottom. So this gives you support down here. So it could be a very long trade, but you could actually hop in right here on a buyback. All right, check this out. So if you're going to hop in on a buyback, this is like mid-level right there. Okay? That could be a buyback zone. So if you buy back here, stop loss underneath your proclaimed four-way, support level, or even if you wanted to, under the 618 for even more confidence, and then a push up. But this is like ping-ponging now. You know what I'm saying? You could just as easily find support here, find resistance here, and go down and make a broadening wedge out of this. You could channel this thing forever. All right? The overall bigger picture, obviously, you're in a downtrend. That's pretty clear. Here's your highs all the way up here. Like your highs up here. So, if anything, you're in a downtrend, but you are ranging a bit. But you can play the local moves, right? The local moves give you a local low, a local high, and then an area in between from which you can trade, which is this right here. So you try to look at those things and you try to find, what is price actually doing? It's failing to make a higher high. Every time it tries, it fails. So the second you're saying to yourself, I'm going to long this, right? You have to defy the odds, right? You're counter trend trading. The trend is down. You're reversing, right? You're trying to play a breakout play. So it's far more rewarding, but it is far more risky. So now this right here, this is the indication. This is the first time, this price action right here, this is the first time that we've met our previous high. So here's our previous high, previous high, previous high, right? We actually had a good pullback, right? Actually a monster sell-off, good pullback, and a good push. And that push has got us back to previous high. We've never done that. So that's the first indication, like, yo, we got something different here. There's something to pay attention to. And this is one thing to look at. You could ABCD this pattern. Again, you'd have to forego the wick down here, all right? But it'd be like this and like this. So you'd be looking at like a 0.68. So I guess probably like a 141 ballpark. Essentially like that. So if you wanted to do that, you just measure this and just be a 1-to-1. AB is supposed to equal CD. So these are good. A lot of people don't use them, but this is just a quick way, really, just to find your 1-to-1. So let's see here. AB. Where is it? Oh, where did it go? 1.6. 1.6. Okay. And then you take your little measurement ruler over here, and then you just drag it over. So like that. Boom, boom. So it was further than a 1.6. Holy cow. Man, that thing crushed it. All right, so let's get that measurement, make sure it's valid. Do something like this. A, B. Oh, dude, I don't know about that. That could be a 2. Yeesh. 2. Nah, no way. Just get a 2 in here. Let's see. Hold on. Bear with me. That's a 2. Okay. So it's a 2. Very nice. Lots of rules. When it comes to ABCDs, lots of rules. When we get into like harmonics and advanced harmonics, tons of rules. But this is, something you would shoot for. Believe it or not, this is a bearish pattern. But the overall getting to D is bullish, but it is actually a bearish pattern, right? So, once you hit D, right, you're looking for that. All right. So, but anyway, so let's see, Regal, where are you at? So Regal was looking for, pulling back in. So let's see, where was the target here? Target was 139. Next one's 145. So let me do this. Let's go. Bang, bang. 139, 145. Let's do this. 139. Okay, and 145, right? Is that what I said? Pretty sure. 145, there we go. Okay. So what happened was price came in, hit the first target, and then pulled back. And now you're looking for getting up to the next target. So you're looking to make a play off of here. So you're trying to sell 100%, buy the pullback, and then get in. So you're trying to like sort of double dip the play, which is, we don't advocate that, but you already did it. So, try to help you out here. So on re-entries, I like the, depending on the actual time frame of the actual, play, I do like to, what happened here? Whatever, let's get rid of this. I do like to get in on the smaller time frames, 4 hour, 1 hour. I've used 30-minute and 15-minute for entries and re-entries on pullbacks. So, it's perfectly doable. If you understand your candlestick patterns, right, then you would understand that this would have been your buyback, right? That would have been your buyback. Again, right, we don't long resistance, but you have a different objective in mind, right? You're trying to get up here. You would have already been in up here, and you would have been suffering a temporary loss or a smaller gain from your entry, right? From wherever your entry was. Intra, right? You'd be looking at, this is the candle that provides all the buyback, right? So this would have been your entry on the next candle, confirmation candle off of this would have gave you definition or confidence to go in long. However, this area right here is historically resistance. As you can see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 candles of resistance in a fairly short window of time. So again, what we do, break and close above resistance by the pullback. It's happening as we speak, and it's gone. So that was the pullback, right there. Oh, you got one more chance. 137. That's your pullback. Now, would I buy it? No, because I'm not buying into resistance. Right? Oh, that's not resistance. I'm sorry. This is that's the profit target. My bad. And you're above your fail, right? You're above your trend right here. So that's the candle that you want to look at, right? That's the break and close above, pull back, you buy the retest, you push up. Now, if you were just taking this trade brand new, right? Say, okay, hourly chart, I'm going to allow this thing to come down as low as my last candle body closed. So this is basically my swing low for this move. So you might set a stop right here, and you might get stopped out. That's trading. That's trading. If you don't and you stay in, that's great. Then you push past this level here, becomes nothing. That's the original profit target. You do have an area of interest coming up because it's the 382, and then push past that would be the next target zone. All right. Now, going back to what we were saying about indicators. Now, again, this is using no indicators, none at all. But the question was something about must-have indicators. I don't know if this is a must-have, but I do use them. So I guess take that with whatever, however you want. I like MAs. I like EMAs. I like moving averages. Why? Because they're more or less dynamic support resistance. They move with price, even though they're a lagging indicator. And by that, this particular 9 exponential moving average is taking the last 9 candles of price action, right? And then it's putting more weight towards the current price action and less weight towards the 9th, 8, 7, 6 price action. And that's giving me an average price. This is giving me a line from which I can say, okay, I like that line. Or maybe you don't like that line. I happen to like the 9, I like the 7, and I like the 10 for EMAs for faster moving EMAs, right? Those seem to be the common ones anyway, but I mean, whatever. This chart right now has a 9 on it. From there, you have other EMAs that have specific weight in specific charts, such as like on the hourly chart, I like the 920, the 20 being an MA, the 9 being an EMA. On the 4-hour chart, again, I love the 20 MA. I love the 50 MA. I love the 20 MA cross on a 4-hour chart. Tie that with a 7 or a 9 EMA, depending on kind of what I'm looking at. I also love the 100 and the 200 MA on a 4-hour chart, and basically anything going up, right? So the 4-hour chart, 6-hour chart, 12-hour chart, 24-hour chart, weekly chart, right? Love the 20 MA. Love the anywhere between a 7 and a 9 EMA. And when you get into the bigger daily charts, like the 50 MA is huge. The 100 MA, the 200 MA, the 100 EMA, the 200 EMA, even up to like 350, 700, 750. Like these are all allowable MAs. The 89 EMAs is an EMA people use. The 70 EMA is an EMA people use. The 21 EMA on the weekly you see us use. So there's common ones, and then there's a lot of like weird, like this dude over here uses like a 17 EMA. Okay, that's fine. If he can historically backtest it, that it has some validity to use, and he's successful with it, then let him use it. There's absolutely nothing wrong with that. The only issue when it gets into those weird things, and I see a lot of people do this, that they don't look at like a 4-hour chart. They look at like a 5-hour chart or a 5.5-hour chart. They don't look at like a 60-minute chart. They look at like a 70-minute chart. Or they're not using, like a 10, EMA, MA. They're using like a 3 and like a 17 or a 28. The problem with all that weird stuff, the bots aren't looking at it. The other traders aren't looking at it. And I like to see what the other people see. I like to get an idea of what the other people get an idea for. So like Reed was saying, right? Reed was saying it looks dumpy, right? So I want to know what Reed sees. Because if 100,000, 200,000, a million other people see what he sees, then it doesn't matter what price action is. They can force the price down by selling, right? So I like to know what everybody else knows, because that sort of helps give you an idea of where things might go. So again, I don't necessarily use the RSI all the time, right? But I keep one on most of my templates because I want to know what other people are looking at. I want to know what they're referencing, right? And when they're looking at divergence, right? It's not that it's almost always, but it's typically divergence from price to RSI. Price to MACD is another one where you see a lot of people talk when they're confirming divergence. They're speaking about the divergence from the price to the MACD, right, or the histogram to it. People use divergence with volume. I love volume. I'm a big fan of volume. I put volume as a very important factor into trading. However, most of the volume on most exchanges is fake. So it's a double-edged sword of how much weight do you actually put into an indicator that's full of shit. Right? It's like you need to at least be aware that the volume is or can be faked, but notice that it's been faked the whole time, right? So hopefully it's faked by the same amount, right? So it at that point, it doesn't matter what it is. It becomes a degree of what it can and what it can't be. So if from what it is now is higher or lower than where it was, and you're faked by the same amount, like by a percentage of 2,000% for the reports, right? Then who cares? Right? Then it's just on a scale 2,000% above everything else. As long as it's applied equally to every candle, then I don't care. But I like to put strength in moves, right? So this is a upward move, right? And right now we do have upward volume, but the last 1, 2, 3, 4, 5, 6 hours have been down. And 1, 2, 3, 4, 5 of those candles, right, have been down as well. Price only started going up here. Volume went up with it, and we're currently still trading in this candle. We just broke it. We got 48 minutes to go. So trending volume, even though it's only 2 nodes, and we're looking at 2 candles, is going up. Volume up, price up, that's bullish. All right. Volume down, price up, that's bearish. That's your divergence, right? Price is going up, but the volume is telling you there's no support. Nobody cares, right? It's the same 5 dudes in their mom's basement playing poker, trading Bitcoin, right? There's nobody trading it. So the price going up becomes artificial, and I put less weight into that, right? Even though the move is bullish and the candles are bullish, if there's nobody to support it, then it becomes sort of like a happy accident, right? It's almost like a completely fake move altogether. Like people were, you can look at Bitcoin and look at the move up from 31, right? And if you don't have certain things to go with that, then you could sort of inflate that move. You know what I mean? You can make it look artificial. You can make it feel artificial. And that whole, move up to 14 in hindsight could just be a massive fake out for lower lows. You can hypothesize anything you want. That's one of the beauties of looking at charts. I've hypothesized down to 1,200. I've hypothesized up to over 100K. You can look at the chart any way that you want. I got out of the future cast of what price is going to do in 5 months and 7 years. Even though I love to do it personally for me, the environment is just not acceptable to that, right? It's just far too toxic, the actual world, right? So I keep that sort of stuff to myself. Locally, when I trade, though, I'm looking at local action. I'm looking at price action. I'm looking at what's happening right here, right now. I'm not worried about what happened a few years ago unless it has a monster support resistance, something huge and historical that is going to change today's price. It's going to change today's buying opinion or selling opinion, and then I'm interested, right? Then I want to know. But future casting something like, 6 months down the road is almost, it's crypto, man. We don't know. The market is young, right? It's a 10-year market, and that's only for one coin, right? Bitcoin's, 2009. So it's like, it's coming up on its 11th birthday. So, in the beginning, trading Bitcoin was not like you didn't use exchanges, and, this sort of like liquidity and stuff didn't even exist. It's mostly OTC. You send it to your buddy, you send it to your friend, right? Coinbase, I think, was still one of the first wallets at the time that just allowed you to move it back and forth and buy some. So, things have changed throughout the course of crypto as a whole, but just looking at a chart, I like to get the overall bias right away. So when I put a new chart up, typically if I can't fit it into like daily, I'll just roll a weekly on there, a monthly. I'll just say, all right, what's going on with this thing? What is it doing? Okay, clear downtrend, high, low, right? Sideways range action. Looking for a move to the upside, could easily break just as easy to the downside. So you have clear support levels down here. 1, 2, 3, 4 candles, all more or less obeyed the level at 78 sats, right? So 78 sats becomes an important level. Did we touch down over here? Looks like no, we came close, so 80 sats. So I would probably have an 80 to a 76 sat range all the way on the downside. And that's one of those things I would put on like a weekly chart, and I would refer back to it from time to time saying, this, if we do start getting down here, I'm looking at that might be a potential buy zone, nice double bottom area support. But you're playing a reversal, super high risk trade in order to do that. On the high side, right, topped out right here, I would say this level with the zone range up top was the highest we could go. So right off the bat, I'm saying 350 sats is sort of the ceiling on this particular move. Sure, I can hypothesize that it'll take another 8 weeks to get there. I could say with some sort of validity, right, that will at least get back to these ranges right here. But based off of what, right? You need something, some type of technical analysis or fundamental analysis, depending on the type of trader you are, to get you those targets, right? And all I see right here is selling and then sell off, sell off, sell off, sell off, sell off, right? This is all I see is this zone over here is being respected, but it's being respected to the downside, right? So the tops of all these candles, right, this whole area becomes a suspect zone. And it doesn't mean that you can't trade in there. Sure you can. This was a week long. That could have been 3-4 days. You could have been making, tons and tons and tons on trades in here, just not long-term trades. If you were long-term in here, you would have lost, right? Unless you're super long-term and it does eventually reverse. Then you come up to these zones, then you're in good shape. Whew. Okay. Rant time over. So, Regal, are you good? Did you get your entry? Well, I mean, we talked about it, right? The pullback was, I think, 137. Again, I mean, it's not a signal. So don't pretend that it is, right? That's what I see right here, right now, currently. All right. Remember, I did not even advocate to buy this. Oh wait, no, did I? Well, I mean, I probably get past the 382, which is right here at 140. But it cuts into your profits. So tight stop loss, throw it up, be good. We were talking about indicators that we like. Yes, I do like EMAs, MAs, that type of thing, and that does also help me with entries, and it does help me with exits. All right. I like Fibonacci's, extensions, profit targets, stop losses. I'll use all that stuff. Drawing tools for sure. All right. So an entry on here, look at the reaction to the 9 EMA on the 1 hour chart. Bang. No. Bang, bang, bang. All right. So 1, 2, 3, 4, 5 candles of the last 5 candles, 4 of them have reacted with the 9 EMA. It's a little bit more risky because you might not get the entry, but I might throw an entry here. You know what I mean? Get the buyback, get the reaction, and then push up. All right? And then you can stop loss so you can see this is tough because that wiped everybody out. Anybody that put a stop loss on an MA, gone, unless you were trading on the 100 MA. The only thing that saved you here was Fibonacci. Trade underneath, right? 618. Let me just double check. Oh, that's the 5. Trading under the 5, stop loss under the 5 would have saved you. You would have stayed in the trade, even with that giant wick. And the 100 MA would have saved you. Trend support resistance would have saved you. Stop loss underneath that. But any type of candle within this zone right here, well, let's see. So you would have got knocked out here. That would have been your pullback. So let's say you bought the pullback here, right, and that all knocked you out. right here, you'd probably be setting your stop right here, so you'd be knocked out as well, right? So, when you get candles like that, there's nothing you can do. There's nothing you can do. Either set a super loose stop or just exit the trade. That's it. You had another opportunity to buy right here if you want to get back in, right? But there was no telling that. You didn't know you were going to get that kind of monster buyback until it already happened. You can't predict the future that they're going to buy that back. Not like that. Not that quick. Okay, so let me just finish up chat and then we'll call it a night here. So, let's see. Which exchange can you suggest? Yeah, we talked about that. I agree. Well said. Okay, we talked about that. One indicator, we talked about that. Too bad all those exchanges take high fees on average. Hey, well, like, what do you want to do? What do you want to do? That's part of trading. You know what I mean? I trade Forex, I trade stocks, commodities. You pay a fee every time you trade. You know what I mean? Get into the habit of knowing that, right? And absorb that into your trading. All right? Make sure that as you trade, right, you are what do you call it? Factoring in fees. All right? Because nothing's for free. You know what I mean? You're going to pay fees. That's how it is. All right, let's see. VPN. Yeah, VPN's great, but CZ already said VPN on Binance is not going to work. You have to KYC for withdrawal. All right, Matthew shows up at the end with a chart request. Matthew, you're killing me. Pretty basic, but makes a lot of sense. I appreciate it. Yeah, no problem. Look, Brandon, like the thing is with indicators, and the reason why I went through so many of them, and I continue to, I beta test indicators all the time. New ones, old ones. I find some that I never heard of, and I test them out too. Every trader, I think, goes through some like evolution. And in the beginning, everything's like crazy, and their chart just looks like, this, and it's super boring. And they're like, I just got to start adding stuff on here and being like, wow, if this happens and that happens, and then bang, I can't lose because everything says, go long. And they'll go through one indicator, two indicator, three indicator. Next thing you know, their chart looks like this. You know what I mean? You're like, whoa, there's just like a million things happening over here. And you're like, I can't do anything with this, nor can I ever make a trade because nothing ever lines up. One says long, one says short, one says don't touch it, like whatever. And then you go back to something like this and you're like, whew, all right, let me just scale it down. Then you start incorporating one indicator, two indicators. You go from 10 down to like 2, and those 2 you might tweak a little bit, personally, just for yourself. You might, one, color them differently, style them differently. Instead of a 20, you might do a 19. Instead of a 20, you might do a 21. Instead of a 9, you might do an 8 or a 7 or a 6 or whatever. Instead of an EMA, you might do an MA, whatever. All right, but you might just dance around with like one indicator, and then you say, all right, I need one more like piece of confluence. So maybe you add, an RSI. You say, all right, well, if this happens and this happens, then I'm going to go short. Now all of a sudden you're developing a system from which you have checks and balances. And if A, B, C, D, and E all say go long, I go long, right? But if A, B say go long, C says go short, D and E say go long, I don't trade. Right? My system won't allow me to because all of my checks, all of my boxes aren't checked. Right? They're not ticked. BTC dumping. What's good with gold? You ask now. Gold is looking good. Gold is looking good. Gold and silver, actually, options-wise, are looking pretty good. So BTC, this is what we were talking about for trend, pullback, support, and push. So what we're looking for here is you got 35 minutes left on the candle. So a break and close below the 20, right? And then you're bearish, you're short-term bearish. Hold support and push above it, and then you remain bullish, right? The trend is still intact. So the trend is the trend until the trend is no longer the trend, right? That's That's sort of how that works. When you look at historical support resistance, and when you look at structure, right, you came up, you made a high, you ranged, you made a higher low, a higher high, range, higher low. This low is usually within structure testing. So you're testing these highs. So a low as 10,430, basically the tops of these candles. I guess so the high side of this candle was 10,448, right? And then this zone, like all the wicks. So you build yourself out a little zone, and then you come up and then you retest it from the top side. So what was once resistance is now support. So the low on this one is 10,434. So I believe that works, right? 434 and 448. Well, it's close, right? So it's not perfect. But that's why you give yourself a little cushion. So again, on the local side, 1 hour chart, right? We're not bearish yet. I need to close below the 20 and then we're bearish, right? And that wraps up this trend for now. That's the end of this trend, right? Then if you reintroduce a candle back above it, well, that's an entirely different story. But this trend right here with a close below that 20, that would be bearish for me. On the 4 hour chart, things will probably look a little bit different. So 4 hour chart here, that's the pullback. You can see the channel right here, right, was a rejection area, right? Of course, it wasn't sat for sat and cent for cent, dollar for dollar. We didn't hit our swing fail, although it would have been great if we did. And, you could probably draw it in a way that you do. But, for all things considered, visually speaking, swing fail, rejection for now. All right, come back down, channel side, close below the channel, makes the channel resistance strong, okay? Because it rejected it, so it made it strong. The swing fail becomes strong, again, because it's already been tested, I think, 2 or 3 times, I think 2 times, and comes back down. Now, what we were talking about before, areas of support. The 9 EMA is the first one. That's this guy right here. We almost touched it, found a little support. If you don't touch it, right, that's usually front running. That's retail traders like you and me and big time makers that are front running the price to make sure that their order gets filled. Right? Because they don't want to put it on the actual number because they're not going to hit it because everybody else front runs everybody else. And it becomes this animal market just to get your order filled. So people are like, forget it, cost of trading, I'll just move it up a couple, percent or so, and then I'll just buy it early, whatever. So we can see right there, 9, it's holding for now. A 4 hour chart, obviously we have 2.5 more hours to go before we close this thing out. All right, so more weight in the higher time frames, less weight in the lower time frames, but the lower time frames do give you an indication of what's shaking, right? So you close below that 20. That's the first time within this trend that you would have closed below the 20 since the trend started. If we say the trend started at a sideways range, breakout from our pattern, which is in yellow over here. So here's the pattern, here's the breakout, there's your crossover 20, and you have not closed below the 20 yet. You closed below the 20, and that's the end of the trend for now. Cool? Cool. All right. That's it's not, we're like creeping into the 2 hour zone. So we're going to end it now. Try to keep these short for the replay guys. So if you do have stuff like, rent, just hit me up at Discord. I'll throw up a rent chart. And, like gold, silver, that sort of thing, we'll do those in the beginning. You just got to fire those puppies off so that we got time. But for now, as far as gold, silver, platinum, long on all those, outside of crypto, options trading. So they look pretty good. They look pretty good. All right, and that should do it. Is there a certain time period that you see better to trade at day trade? Yeah, well, if you're day trading, then you need to be on intra charts for sure. Yeah, if you're day trading, you're intraday trading, meaning every trade should be entered and exited inside of the same day. You're trading like 15-minute charts for entries, 1-hour charts for, setups, 4-hour charts for like overall bias, daily charts for like macro view. Yeah, like for sure. You can't day trade on like a daily chart. It's not gonna work. Yeah, you need to be like, you got to zoom in because you're playing the intra levels, right? You're playing the intra, like all of this trading happens inside of one daily candle. It takes 24 of these things to actually show you one candle. So yeah, you'd be playing all these intra moves, up and down, support resistance, local, EMAs, MAs, Fibonacci levels, buyback areas, pullback zones, all that stuff. Cool? All right. Good. Very nice. Hope everybody got something out of that. A little bit longer than we expected, but that's all right. Cool. So hit me up in Discord. You got any like other questions? Matthew, you're going to have to remind me because I got 400 other things to do right now. So just shoot me a message, tag me so I see it, and I'll get a Ren chart out there as soon as I can. All right. Everybody else, have a great night. Happy trading, and we'll catch you tomorrow for the close.